If you're waiting for a sudden, massive housing crash to finally buy a home, you might be in for a very, very long wait. Let's talk about why. For years now, forecasters have predicted a correction, yet home values just kept climbing. So, what happens next? The market is finally flashing some truly surprising signals, but not the type you're probably thinking of. Let's look at the facts. Right now, we are in the middle of the strongest buyer's market seen in over a decade. The data is clear: by a huge margin, sellers outnumber active buyers. In October, there were over 36% more people trying to sell a home than people actively trying to buy one. To put that into numbers, that's over 500,000 more sellers than buyers in the market. This imbalance gives the buyers who are actually in the game significant negotiating power. What does that power look like in practice? Right now, the typical home that sells is going for 1.5% less than its final asking price. That's the biggest discount we've seen in an October since before 2020. Furthermore, nearly 60% of homes sold recently have had at least one price cut. Homes are also sitting on the market longer. A typical property now takes over 50 days to sell, which is a full week longer than this time last year. So, the pressure on sellers is very real. Now, here's the critical point. While this sounds like a market on the edge of a cliff, this is not 2008. Not even close. Why? The financial foundation is completely different. Back then, we had a systemic crisis fueled by risky lending. Today, homeowner equity is near record highs. People aren't being forced to sell. Many sellers in the market today are there because of a major life event, a job relocation, a divorce, not because they can't afford their mortgage. This brings us to a massive misconception. Nationwide home price collapses are incredibly rare historical events. Historically, nominal home prices in the U.S. have only fallen during major financial crises. Looking back over decades, prices have shrugged off most recessions. So, if you're holding out for a 20 to 30% nationwide fire sale, the data simply doesn't support that outcome. Instead, what we are seeing is a major market rebalancing, and it looks completely different depending on your zip code. Some overheated markets are seeing real, significant corrections. Let's look at the extremes. According to the latest data, the strongest buyers' markets, where sellers vastly outnumber buyers, are concentrated in the Sun Belt, particularly in Texas and Florida. Cities like Austin, Miami, and Jacksonville have months of supply piling up. These are places that saw explosive, some would say irrational, growth from 2020 to 2022. What's happening now isn't a collapse, it's gravity. Prices are cooling and returning to more sustainable levels. On the flip side, the strongest sellers' markets are in the Northeast and Midwest. Places like Cleveland, Newark, and Milwaukee are seeing fierce competition among buyers, with home prices rising over 11% from last year in some cases. It's a stark reminder: real estate is intensely local. So, what's the forecast for 2026? My base case has always been this: stagnation. A period where prices move sideways or dip slightly, allowing incomes in theory to catch up. With mortgage rates still elevated, a small correction in some areas wouldn't be shocking. But a crash? The conditions for that just aren't there. Think about the demographic wave. The largest population group in the U.S. right now is in their prime home buying years. Life doesn't stop because rates are high. People still get married, have families, and need space. The desire for homeownership is a powerful force. The real wild card is mortgage rates. If they continue to decline, some forecasts see them approaching 6% in the new year. That could unlock a huge wave of pent-up demand. A drop of just 1 percentage point could bring millions of sidelined households back into the market. But here's the twist: if rates fall because the economy is slowing down, that doesn't automatically boost demand. It's a complex dance. The coming year will be defined by market stagnation, not a sudden collapse. To wrap up, the U.S. housing market is stuck in a strange plateau. Activity is flat. Both buyers and sellers are paralyzed by high costs and uncertainty. But for the buyers who are ready, this is a moment of regained leverage. You can negotiate, ask for concessions, and take your time. If you found this breakdown helpful, do me a huge favor and smash that like button. It really helps the channel. And for more clear-eyed analysis that cuts through the noise, make sure you're subscribed to Winds of Thought. Let me know in the comments, are you waiting to buy, or have you decided to sit this cycle out? Thanks for watching.